Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in company filings. Today, we're diving into Leapfrog Acquisition Corporation's latest report, and let's just say this one's got some interesting moves in its IPO game. Before we dive in, if this is your first time here, make sure to hit that subscribe button. We break down these dense corporate documents into easy to understand insights. Also, we've got a fantastic Discord community where we discuss these findings further, so check that link in the description below. Alright, so what we have here is a Form 8K, which is like a company's urgent bulletin board to the public. Leapfrog Acquisition Corporation, a company that is essentially in the business of acquiring other companies, is announcing the big news about its initial public offering, or IPO. This is essentially when a private company first sells shares to the public. So Leapfrog decided to go public and offered what they call units. Now, a unit isn't just one thing, it is a package deal. Think of it like a gift basket. In this case, each unit contains one share of their Class A ordinary stock, and then half of a redeemable warrant. Let's break that down. You get a piece of ownership in the company, that is the ordinary share, and then you get a warrant, which is like a coupon that allows you to buy more shares later at a set price. It is a common strategy for these acquisition companies, often called SPACs, to offer this combination to investors. They're essentially raising money to find and merge with another company down the line. The ticker symbol for these units is LFACU, and they were listed on the Nasdaq Stock Market LLC. For the Class A ordinary shares themselves, the ticker is LFAC. And for the warrants, it is LFATU, all trading on Nasdaq too. The report tells us that on the 8th of December 2025, Leapfrog Acquisition Corporation completed its IPO. They sold a whopping 14,375,000 units. And get this, they even sold an extra 187,500 units because the underwriters, the folks who helped sell these shares, exercised their option to buy more. Each of these units was priced at $10, which means they raked in a massive $143,750,000 from this offering. That is a lot of money to fund their future acquisition plans. Now, alongside this public offering, they also did something called a private placement. This means they sold some units directly to specific investors rather than through the open market. They sold 328,750 units to their sponsor, Leapfrog Partners LLC, and another 143,750 units to BT LLC, which represented the underwriters. This brought in an additional $4,725,000. The exciting part for investors is always where the money goes. A significant portion of the proceeds, $143,750,000 in total, which includes some deferred fees for the underwriters, was set aside. It has been put into a trust account for the benefit of the public shareholders. This trust account is where the money sits until the company finds a target to acquire or a deadline passes. To show you the financial picture right after this big event, they've provided an audited balance sheet. This is a snapshot of the company's assets, liabilities, and equity as of the 8th of December 2025. It confirms they've received the funds from both the public offering and the private placement. Now, let's think about what this all means. Leapfrog Acquisition Corporation is essentially setting the stage for its main act, finding another company to merge with. The IPO is the fundraising round to make that happen. The money in the trust account is the war chest. The report also flags that Leapfrog is an emerging growth company. This means it is a relatively new public company and gets to use some relaxed regulatory requirements for a period. This is pretty standard for companies like this just going public. They also indicated they are not using the extended transition period for new accounting standards, meaning they are adopting them right away. So, what is the big takeaway here? Leapfrog Acquisition Corporation has successfully launched itself into the public markets. They've raised a substantial amount of capital, which gives them the firepower to pursue their acquisition strategy. The success of this IPO is really just the first step. The real test will be how effectively they can deploy this capital to acquire a promising business and create value for their shareholders in the future. Looking deeper, the structure with units including shares and warrants is a way to attract investors by offering upside potential from the warrants. The inclusion of a private placement with the sponsor and underwriters is also typical, ensuring alignment of interests. The funds being held in trust are a critical safeguard, preventing misuse of IPO proceeds before the acquisition target is identified. The warrants have an exercise price of $11.5. This means that if the company's stock price rises significantly above $11.5 in the future, these warrants become valuable, giving holders the right to buy shares at that lower price. This adds another layer of potential return for investors, but also a potential dilution of ownership if many warrants are exercised. While the report focuses on the IPO itself and the immediate financial inflows, the real story lies ahead. The company is now under pressure to perform, to find a suitable acquisition target, and to execute a merger that will ultimately benefit its shareholders. The market will be watching closely to see what industry they target and how successful their due diligence and negotiation processes are. To wrap up, Leapfrog Acquisition Corporation's IPO is a successful execution of their initial fundraising strategy. They've got the money ready to go. The question now is, what will they do with it? Their direction is clear: to grow through acquisition. The strength of this company will ultimately be judged by the quality of the business they choose to acquire and how well they integrate it. A key risk for any SPAC is the possibility of not finding a good deal or overpaying. Opportunities lie in identifying undervalued companies or fast-growing sectors where their capital can make a significant impact. Alright, that is our breakdown of Leapfrog Acquisition Corporation's Form 8K. What is your take on SPACs and their role in the market? Do you think they offer good opportunities for investors? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out, and subscribe for more decoding of corporate actions. And don't forget to join our Discord community for deeper discussions. Thanks for watching, and we'll see you in the next video.